Welcome back to the Slacker Trades Weekly Outlook, the week of July 20th. On the surface, it looks like a sleepy range-bound market, but there's one session Wednesday night that could decide the whole week. We'll walk through the index board, the two earnings reports that matter, the calendar, and where the money is rotating. Let's get into it. Starting with the index board. The S&P is at 743, the Nasdaq at 695, the Russell at 294, and all three red range-bound in our models. The expected one-week moves are modest, about $11 on the S&P, 18.5 on the Nasdaq, under 6 on the Russell. Those bands are your guardrails for the week. The Fed is in its pre-meeting blackout ahead of the July 29th decision, and the calendar is nearly empty until Friday. Now look under the hood, because the calm is narrower than it looks. The VIX is holding near 19. So the options market isn't buying the quiet. The Nasdaq dropped 2.5% last week while the S&P finished nearly flat, which tells you the selling was concentrated in tech, not spread across the market, and the Nasdaq's RSI is the weakest of the three majors at 42. Here's why it matters. Wednesday after the close, Alphabet and Tesla both report. With no Fed speakers and almost no data in the way, that one after-hours window likely decides whether the rotation out of tech extends or snaps back. Here's the event itself. Wednesday after the close, both Alphabet and Tesla report in the same window. Alphabet's call is at 4:30 Eastern. The street is looking for earnings around $2.90 a share, up about 25%, on revenue near $117 billion. But the number everyone actually cares about is CAPEX, because Alphabet's AI spending guidance has become the proxy for the whole AI trade, and chipmakers will trade off it. Tesla's call is an hour later, revenue expected around $26.4 billion, up 17%. Tesla is the biggest single catalyst in consumer discretionary, a sector already lagging into the print. Two megacaps, one evening, and a market with nothing else to trade on until Friday. Here's the week laid out. Tuesday is a heavy earnings morning. GM, 3M, Northrop Grumman, Capital One, Danaher, and Halliburton. Wednesday is the event, the Alphabet and Tesla doubleheader after the close, with Texas Instruments and AT&T also reporting. Thursday brings jobless claims at 8:30. The last reading was 208,000 against 217 expected, so the labor market keeps refusing to crack, and Freeport-McMoran reports. Friday rounds it out with the July flash PMIs, new home sales, and weekly options expiration. That's the whole macro slate. Everything else is earnings. Underneath the surface, money is rotating, and the sector table makes it plain. Over the past month, healthcare leads at plus 5.3%, followed by energy and financials, all three positive. On the other side, technology is the worst on both timeframes, down almost 6% for the month and more than 5% last week, with consumer discretionary and materials also lagging. This is a leadership change, not a crash story. The average stock actually rose last week, even as the big cap-weighted indexes slipped. Wednesday night is the vote on whether it sticks. So who are the names behind that rotation? On the leading side, Eli Lilly at record highs on GLP-1 momentum, with JP Morgan lifting its target to 1,400, and it's the biggest weight in the top-ranked healthcare sector. Halliburton reports Tuesday and tells us whether oil's 10% pop has legs. Capital One reports Tuesday too, and its consumer credit commentary is a real economy check. On the lagging side, Texas Instruments is the first big semiconductor print since Friday's sell-off, a tone-setter for tech. Freeport-McMoran, the copper bellwether, reports Thursday. And keep an eye on the semis ETF SMH, the swing factor for whether tech stabilizes. So how are we thinking about it? Range-bound regimes with modest expected moves mean index premium is thin. This is not the week to sell naked premium and hope. The real risk sits in single names around earnings, so defined risk spreads make more sense when volatility is this low across the indexes. The expected moves are the guardrails, roughly $11 on the S&P and $18.50 on the Nasdaq. Inside those bands, the range trade stays intact. A close beyond them after Wednesday night would be the first real signal the regime is changing. Bottom line, the indexes say calm, but the calendar says Wednesday night decides how long that calm lasts. When a range-bound tape meets a binary catalyst, the edge is knowing your levels before the event, not reacting after it. Subscribers get our full weekly watch list of high 4 names and our trade callouts when a setup actually lines up. Some weeks we trade, some weeks we wait. Trade the premium, not the prediction. We'll see you next week. Join us at slackertrades.com.